Record.
Go.
We go. Recording in progress.
And good morning, everybody. Wow, this room is filling up fast. I'm not surprised. This will be more exciting than the market has been for the last couple of weeks.
Oh, it's just been depressing. God, what a game it is sometimes.
It can be, yeah. But then there's those moments, isn't there? You know, like you said, if you don't want to go and check your exchange, there's somebody else that will. And that's part of the game. Let's not get shaken out because we're bored. Oh, wow. Okay. I reckon we probably have to give it another 30 seconds. There's still people flooding in here. Wow.
Right.
Okay. If everybody wants to test the chat, just fire an emoji or something in there and just feel free to, and ask questions as they come to you. And I think at this point, we'll hand over to Scott.
All righty then. Let me share my screen. One sec.
Are you on just the laptop?
Yeah, I'm on the laptop, so I'm a bit clumsy here. Hey,
Sausage fingers on the trackpad.
I'm good now, though. All right, guys. Welcome to today's webinar. We're going to do a really deep dive on what's going on and the outlook going forward. The bottom line, the starting point, is that we had 6 months of up only from about halfway through October. And we've had 7 weeks this week. So call it 2 months of down. Not quite, but call it 2 months of down. The question we got to ask ourselves is this normal? Has something changed? Is 6 months all we get? Is that just topping? A few days ago, we had this kind of very critical support level where every time it got down to this level, people bought it. Every time it got down to this level, people bought it. Every time it got down to this level, people bought it. On this day right here, we said, I don't think this is going to hold. This is a bit stinky. Why? Because it looked quite bullish the day before. And we've broken support. A lot of people got shaken out. There was a leverage liquidation event, and we're holding steady. I thought this support would probably hold until this day when I thought that it would probably fail. Now, the interesting part of this is that the support lows aren't broken on any major altcoin, on Solana, on any alt that you want to name, not just the strong ones, but also the weak ones. Altcoins are actually stronger than Bitcoin right now, which is very interesting. So we've got two scenarios in play here, and this kind of simplifies things. The first scenario is this is a normal correction within the context of a larger bull market. And the second scenario is that the market has topped. It's all over. Pack it up for another couple of years. We're completely fucked, far from home. I think I'm interested in your opinions. So in the chat, do you think it's number one or number two? I don't think it's manipulated, Rowan. Yeah, there's lots of ones. That's the base case because we're in a bull market. Pullbacks in a bull market are completely normal. We ought to assume until we have strong evidence, and we're going to examine what the evidence would look like if that changes today. And one thing that really gives me a lot of confidence is that there's, all the usual retards who tell you that gold's gonna skyrocket and the Fed is fucked and all those assholes. Like this guy is like the cheerleader of them all, Michael Gayed. If I had a name like that, I'd just shut the fuck up. These guys are never right. They're always wrong, and they're just out there doing victory laps right now. So that's kind of a good sign. The starting point for me is to look at, well, what correction have we got, and what were other bull market corrections like? They were much bigger than this and much scarier than this. So the starting point is that we just haven't had a correction in 6 months. So the first one that we get is freaking people out. So what's the cause of this? In my view, it's a couple of things. So first of all, this is our Bitcoin ETF flows. So the ETF flows are in two parts. The new ones are the ones up here, and the old ones are GBTC mostly. And so money flew out of GBTC into the new ones. When that kind of finished, we haven't got any new flows. And you can see that those have trended down and then gone negative. This is the real deal. So the front running the ETF announcement pushed things probably a bit further than they should on the upside. And the outflows from the ETFs are pushing things a bit further on the downside. And you can see this clearly as these ETF flows tapered off. Now we're starting to get outflows. This is probably the 60, 70% of the cause of all the fuckery. Now, our futures funding rates were getting very, very overheated. That's completely reset. So everyone who was a leverage trader, thankfully, we got most of everyone off leverage trading before it was too late. Almost everyone who was a leverage trader is completely wiped out. And you can tell this because funding rates, which were positive and should stay, broadly speaking, positive and only go negative for a short time if it's a bull market, this is about as much as you'd see. If we're in a bull market, funding rates shouldn't go sustained negative for any length of time. It should just be brief negative patches. Now, this is from our Glassnode. This is the total supply held by people who've held them for a long time. So what's a long time? Longer than 155 days. So you can see that long-term traders started to take profits as we headed into all-time highs. That supply, about 1.2 million Bitcoins, has been soaked up by the market. And you can see that over the last month or so, we've soaked up that supply. Conclusion, this kind of looks like that selling pressure has abated. Now, the next big thing, which is probably a bigger thing than we're giving it credit to, but there's nothing we can really do about it, is that the US economy is very, very strong right now. Like by every metric, you're at full employment, everything's going great. Really was, like for all the shit that we talk about the Fed, 2 years ago, it looked like we were in a recession. We were going to go into recession. We haven't, and it's been a soft landing. And now they're trying to walk back the possibility of rate cuts. It is very unlikely that a speculative market like ours will be able to post a bull market if we go into 3 or 4% more hiking to kill inflation if inflation comes back. That's just the way it is. That speculative markets do much better when we have rate cuts than rate rises. And I don't want to lie about this, and I don't want to be honest. If you're worried about this, and it's definitely something to keep an eye on, FinRev is really the only solution because FinRev will do just fine in a hiking cycle. So the sell side pressure, this is our old supply, the net position change. You can see in 2017, we got one peak at the second last pump. And in 2021, we got the same thing before a secondary pump. This is kind of my base case, that probably we're not looking at a full $300,000 for Bitcoin kind of cycle, like a 2017 cycle. We're looking at one more pump to 150-ish K is my base case. So I don't think we're going to have a rip-roaring 2017 style blow off top. I do think we've got 5x from here in most major alts. Now, this is from DeFi Llama. This is the funding rounds that we have from VCs. And you can see that the activity here in 2024 is very muted. It's less than it was even in 2017. this is not the kind of thing that we see at tops. Now, our hodlers, who are long-term traders, this is their net position change. And you can see that they sold out into this top here. Their selling pressure has abated, and we're seeing just the first signs of these long-term hodlers buying. And you can see what happened after we saw this previously. We tend to see a very strong rally. The meme coin section of the market, I just picked Retardio because it's my favorite meme, but with WIF and most of the others that aren't scams have held up really surprisingly well. I am shocked at how well the meme sector has held up, and that looks like it's going to work. If we get a continuation, this whole meme sector looks like it's going to work. Now, this is something that we see time and time again. Every time we get a bull market, people think, oh no, that's all we're going to get. Oh, it's all over, sell, sell, sell. And then as soon as those guys have finished selling, we get another leg. And then as soon as people sell out thinking, oh, it's topped, it's all over, we get another leg out. We get the same thing here. We get the same thing here. You know, for a little minute, it looks like a top. And then we're just back on like Donkey Kong, and we're right here right now. I think this is the key chart for today, guys. I think this is the one that really makes the most sense. As long as we can recapture this red line here in fairly short order, I think we're good to go. So far, this reads kind of like a fake out, shake out, very normal. That could change. But right now, the default case has to be that this is an ideal opportunity to accumulate the good stuff, not the crap stuff, but the good stuff. And yes, I get that it's a little bit scary to buy right now. That's what you want to feel. When it feels like a slam dunk to buy, you're probably wrong. When it feels like it puckers your ass a bit, you're probably in good shape. Now, FinRev, our automated system, is mostly short right now. This is our biggest positions. And you can see we've got, 2 out of the top 3 are long, but they're mostly short. 3 out of 15 of our top positions are long. FinRev is about 80% short right now. And this is why FinRev hasn't really lost money compared to the rest of the market. It's only down about 20%. So not over trading when the market weather isn't right. This is a big part of success. There's absolutely no point in yanking and banking and slamming meme coins all day when you're just going to lose money doing it. But we need to recognize a little bit ahead of the pack when it's time to start paying attention. And that time is now. It's been a nice break for me personally. Spent a month back in Australia. I'm going back next Tuesday. It's time to get back into the game and start paying much closer attention. Now, my plan here is as soon as we recapture that trading range and it's clear that the danger is past, I'm going to start aggressively scalping long, and I'm going to start using leverage again. And I haven't used leverage since February, January 26. So our plan has always been, we're going to get the bag using our 100x coin club picks. We're going to secure that bag with our automated systems. And we're going to 10x them. And then that's how we're going to get to generational wealth. That's actually my plan. It's working great for me. I just personally crossed 8 figures in my trading accounts this month. The plan is on cruise control. I'm pretty happy with how it's working out. So if you're worried that the party might all be over and you bought the top like a sucker, if you're feeling like, oh no, maybe this was a terrible idea, I never should have got into crypto, damn the people who told me this was a good idea, FinRev is the right home for you if that's the way you're feeling it. Our automated systems do just fine when the market changes. So I think the bull market is still on. But the game isn't really how much you make, it's how much you keep. I'm going to show you in a couple of minutes how we take the profits from the 100x coin club. We get about 10xing that on autopilot. And when I say 10x returns on autopilot, you might think that's high, but since 2019, what I'm going to show you today is turn a $10,000 starting investment into $203,000. Today, you're going to see a press button make money system that makes money every single year since we started in 2019. It's never had a losing year. Doesn't have $6.3 million worth of our own money. It has 14, I think, right now, of our own money, and it's made slightly less than that. It's made like 97% compound annual growth rate per year, but it earns risk-adjusted returns better than George Soros and Ray Dalio put together. It works in bull markets and in bear markets. It printed money during the SBF debacle, every other crypto disaster. It's actually making money right now. It requires no thinking, no luck, no predictions, and you don't have to know anything. You don't have to do anything. You don't have to be technical. It runs on autopilot. You don't need to check it at all. And it takes 3 minutes to set up, and it requires zero technical skill. It takes the risk out of crypto because it makes money like clockwork in bear markets. 4 of the 10 biggest hedge funds in the world use it right now, and it's created countless billionaires and multimillionaires like this guy, John Henry. He owns Liverpool Football Club, the Boston Red Sox. He's made $4 billion from trend following. This guy, Clifford Asness, he runs $150 billion and he's kept $1.6 billion for himself. He wrote the second ever academic paper on trend following. And I've been doing this in TradFi since 2014, and these are my own personal results. I'm up actually 130% this year so far. I had a pretty good April, not as good as February and March, but everything's going great. I'm ecstatic with this method of wealth building for myself and my family. And it's based on the oldest and most consistent way of profiting from any market, which is that the trend is your friend. And so what is trend following? It's the simple idea that a coin that starts going up has a higher probability of continuing to go up. It's as close to a law of the universe as we get in finance. It was previously only available to the very largest hedge funds in the world, and there's a $300 billion industry who've been printing money hand over fist with this for 40 years. In 40 years, not one trend-following hedge fund has ever blown up, and firms like Dunn Capital have outperformed the S&P by 475% over a 50-year period. My retirement accounts are with this guy, Paul Mulvaney, is a friend of mine. He's outperformed the S&P 500 by 600% over a 20-year period. Really happy with Paul, and I recommend him. The trend following index, this is every trend following firm which has a track record longer than 10 years. And you can see the gray line is the S&P 500. It's the strongest stock bull market in recorded history. Trend following has kicked its ass. Now, let's go back to the old school. The first human city was in ancient Sumeria. It was called Ur. And before they used money, before money was invented, they used barley. And they stored barley prices on clay tablets. They dug these tablets up 5,000 years later. Turns out that you can run our trend following systems on it, and they work just as well as they did 5,000 years ago. Now, some of you might have seen my trend following patterns that I post sometimes in the 100x Coin Club. I didn't invent those. They came from 16th century Japanese rice markets, which were the very first futures markets. Trend following worked just as well in the 16th century in Japan as it does today. It's worked annoyingly well for at least 100 years. This is our decade by decade returns. You can see that every single decade since 1880 has been positive. Very low correlation to the US equity market, meaning that when stocks go down, this doesn't go down, which is a huge advantage. Because if you think about almost any other investment you can make, in 2008, they all got fucked, except for trend following. So what I'm trying to say here is that trend following is as close to a law of gravity as we have in financial markets. It's worked in stocks, bonds, real estate, FX, commodity, every country in the world for as long as money's existed. It's worked for 10,000 years because it's based on human greed and human fear. None of those have changed. We're still greedy. We're still fearful. But the amazing thing, the opportunity of our lifetimes is that it works 6 times as well in crypto. And it really does. Now, this is what we call the greatest discovery in little guy finance. Now, instead of talking about it, let me show you. Okay, so our bull market here, this is these are all the coins we track. So our bull market clearly kicked off in about October. So let's put the start of about halfway through October. And what are the top coins? If we look at our very top coin, Pendle, coin I'm absolutely red hot on, you can see long before it went to the moon, it started outperforming its peers way back early here. You can see that it came out to an early lead and just streaked away. And this is true for every coin. It's true for NIA. It's true for Solana. Way before Solana started to go nuts, it was outperforming everything else right back. Rune had a day in the sun early, and you can see early on Rune was the serious gainer. Everything that goes up starts way before it does this. You look right back, and it's going to be outperforming its peers early. Now let's take a look at the last bull market. So the last bull market came in two kind of goes. The first bit was in 2021 from January to May. So let's have a look at that. You can see that clearly out of all the coins, you really wanted to hold Matic and Doge. And we see exactly the same thing, that long before Matic went to the moon, it started outperforming its peers. Long before Elon started tweeting about it, Doge was outperforming. And the same with Solana, the same with Chili's, the same with everything. This is something that we see universally. And then the second half of the 2021 bull market, was from about July until pretty much midway through December. And let's have a look at that again. Sorry, I'll get the... Okay. So from July in 21 up to the end of the bull market, you can see the clear winner, the coin that you want to hold above all others, is AVAX. And you can see really clearly it started to outperform super early. Same with NIA. Started to outperform super early. Same with Mana, just went nuts right here. It's a clear sign that it's going to go to the moon. Solana, same thing, but a bit earlier. You know, this is a very, very reliable property of markets. That coins that start outperforming nearly always continue to outperform. And we see this everywhere. Now, you now possess the ability to know with absolute certainty which coins are going to be the moonshots in this 2024 bull market. And let's just go back and look at them again. We're looking at Pendle, NIA, Sol, SEI. You know, this is all very clear. Now, let me show you how to take all the thinking and the guesswork and the uncertainty and the skill and all the bullshit out of it. Let's turn it into a system that doubles your money every year on autopilot. And just so that you don't think it's all hype, I'm going to give you that system for free at the end of this presentation just for turning up to that. There's no catch to that. There's no credit card or any of that free trial bullshit. If you want us to automate everything for you so you can just sit back and collect the bag with no work and no risk, I'm going to offer you the best deal you can imagine on that. We can automate this whole thing for you into a press button money printing machine, and you will learn today how to ride this bull market for all it's worth, then compound your gains into generational wealth. So let's say you bought Bitcoin right at the perfect time, way back in 2019. You bought it Bitcoin for $3,700. You made money, you lost money, you made money, you lost half of it. It looked like it was going to be okay. It wasn't okay. Looked like it was going to be okay. It broke your heart. Over this whole time, you made 57% compounding return from Bitcoin, which is pretty good. But our system did 107% in that exact same time. And most importantly, you made it without experiencing the torment, the pain. I mean, Bitcoin will hurt your feelings to HODL it. At any point with our system, which is the blue line, you can cash your money out with a few clicks of the mouse. You always have liquidity. You never get stuck holding the bag. If you bought here, you have to wait. You had to wait until it came back before you could get your money out. But with us, you've always got constant liquidity. You're always a few clicks away from just getting your money back and doing something else. So if you bought at the absolute worst time, in the top of the last bull market, for $69,000, you'd be underwater today. Bitcoin's at $59,260 this second. But our system, actually, you would have quadrupled your money since then. You never had to try and time the exit perfectly. And that's the hard bit, right? Like timing an exit, timing an entry, it's a good trick. Timing an exit, boy, that's incredibly hard. You never experienced a losing year. You never got stuck holding the bag when the bear markets hit. If you stuck $10,000 back in 2019, you'd have $380,000 right now compared to 110,000 in Bitcoin and 146,000 in altcoins. It's a big difference, guys. But most importantly, you're at year 5. You've turned your $10,000 into 380,000, and you're within sight of an 8-figure retirement fortune. You know, 5 years isn't that much to wait when you know that compounding kicks in hard right at the end. And I know this to be true because compounding is kicking in hard for me right now. I had a pretty average month last month. And for April, I made $240,000. It was a pretty average month. The month before that, I made $1.87 million. Why? Not because I'm doing anything special. In fact, I'm doing something pretty normal. It's just because compounding kicks in. Now, if you wish you had a time machine, Marty, we got to go back 2011. Let's buy some Bitcoins. This is the next best thing. Now, I've traded this way in the old market since 2014. I've still got my retirement accounts doing this. They're not $4.3 million. They're over 10 now. We've been running it on crypto for a few years now. The results are nothing short of incredible. We offered it to our best clients in the middle of the bear market. While everyone else was taking it right in the ass, we made money during the bear market, and we made 100% per year during the bear. This wasn't the bull market raging, everyone gets free money, meme coin mania. This is when everyone hated crypto. And the bull market has been a lot of fun. Honestly, it's been a lot of fun. It's been very, very satisfying to get it right. Absolutely 100% right. Now, these are the biggest hedge funds in the world with their 2023 full year returns. Top fund is 59%. By the time we get down to 5, we're down to the top 5, we're down to 20s. And most of these are below 10%. We're just kicking these guys' asses. Like we are just absolutely beating them with a stick. We promised to double people's money in a year, and we did, and we've done it again and again and again. And every single person who's used this system has made money. Everybody wins. There hasn't been any exceptions. It's a great system and it works. Now, all those numbers that I've showed you today, they're not bullshit direct response math numbers. These are net of fees and charges and brokerage fees, and this is what you've got in your account at the end of the day. Now, let me show you how it works. I should have loaded this before I started. What we're doing is we are taking a forecast of what we think price is going to do. If that forecast is positive, we're going long. If that forecast is very positive, we're going very long. If that forecast is slightly positive, we're going slightly long. And so every day we're wiggling up our position down, up or down a little bit according to our forecast. And you can see that we've been broadly long the whole year. But when the market started going sideways, we de-risked immediately. De-risked. We're still long a little bit, and we've only completely out of our longs the last couple of days. So here was when we flipped to negative, we're slightly short. Now, if we look at this over a year, you can see here is where we got long, and we rode this pretty good. We banked some profits, we got back in, we rode it pretty good. This is perfect trading. But it's no big thing to make money in a bull market. Like, that is not actually as impressive as it sounds. What is impressive, however, is to make money when things are getting fucked. And in my opinion, the worst time of all was when Sam Bankman-Fried took everyone's money, and it was his coin, Solana, FTX was balls deep in it. So let's look at what actually happened during those terrible days. And this was the darkest days that crypto's ever seen. So I think this gives you a good idea of what the system's going to perform like under pressure, because this is what it did under pressure. So the day before, sorry, my bad. The day before all the rumors started, our forecast was 4.5. So we'd just taken a half a long position. So the way our forecasts work is 10 is a normal long position, 20 is a maximum long position, -10 is a normal short position, -20 is a maximum short position. So at 4.5, we have a small long position. Now, the next day, the rumors start coming out, there's trouble in paradise. And I personally looked at the rumors and I thought, oh, that's just FUD. Like, that's the kind of shit that people are always talking shit about other people in crypto. Don't worry about it. But our system immediately went from 4.5 back down to 0.7. So it just immediately got out of the long position. Now, if you think about how hard that would be emotionally as a manual trader, you know, yesterday I liked SBF's coin, I liked FTX exchange, yesterday I thought the market was going up, I bought the coin. What are you going to do? Almost certainly it's going to go down the next day, and you say, oh, I'll give it one more day. That's not so bad. Just one day. And you give it one more day, and then you go, oh, that's not so bad. And then you're stuck. And this is the root of pretty much every really awful trading experience I've ever had, is just by giving it one more day. That's how bad shit happens. And then once you're stuck, fuck, then you really are fucked. And so our system not only got out of it long, but went short, stayed short, and just rode this one all the way to the beach. So let's look at how that played out. So you can see that we got short here and we're staying short. These little dot plots are all of our individual algos. We have 6 different trend following algorithms, and we average them all with a complicated process that I won't bore you with. But basically, we got short, got to maximum short, stayed short this whole way, and then only started banking the profits here, and we were completely out of it here. And then, and this is very interesting, we got long. So imagine being a manual trader and you caught this short trade. This is the short trade of a lifetime. You're betting that that Solana is going to go down. It drops from $38 down to $8. You're the king of the world. You've made money while everyone else has lost money. What's it going to take for you to flip long on Solana at $14, $16? Like, you'd have to be so good to be able to do that. You'd have to be much better than anyone I know. Because you're making money on the short side. You're not going to want to look at the long side. But the algo, it just doesn't give a shit. It's like the market's going up again, we got to buy. And it does this on 100 coins at a time. It does this better than I can do it. Well, no, not better than I can do it. It does this as well as me on my best day, but it does it 100 coins at a time. And I can only personally follow about 10 coins before my brain turns to mashed potato. It doesn't care if you like the coin. It doesn't care if you hate the coin. It doesn't care if you take a day off. It doesn't care what an influencer says. It doesn't care about all the stuff you read in your Facebook groups or on your Reddit. It doesn't care about any of that. So let me just quickly load up the actual. And let me load up some data. All right. Okay. This is the first thing you're going to see when you log into it. This is the amount of money you put in, less the amount of money you take out. This is how much you've got today. And this is how much profit you've had. Now, the next thing that you'll see, you just scroll down and you get the top 10 long and short positions. So you can see here, we've got, these are our long positions. TRX, BNB, these are definitely the best holding up long positions. And our short positions are definitely the shorts that definitely the things that you'd want to be holding. You can click on portfolio and see exactly what's going on. You can also do this within your Binance, Bybit, KuCoin, BitGet, DYDX account. And you can sort it by, alphabetical order, by shorts or longs. You can see here today, we've got only a few longs compared to the shorts. But my favorite way to sort it is by notional value. So we're going to put the biggest positions first. And our biggest long is TRX. Our biggest short is XRP. Second biggest long is BNB. And then they're all shorts until Bitcoin dominance. Now, you can click on any coin and get a chart with the forecast. If this forecast is positive, we're long. And so we were long all the way up here. We got out of it, and now we're back going long again. You can also go to a trade history and see what happened on any individual day. Now, the point that I want to make here is that on any given day, like today, we're not jumping all in or all out of our whole portfolio. This is like $200 worth of Bitcoin. Oops, sorry, I hit the wrong button. This is $200 worth of Ethereum. We're buying $700 worth of XRP. We're selling $60 worth of Ethereum Classic. So what we're doing is we're just playing around the edges of a portfolio. We're holding a portfolio that's mathematically the strongest longs and the weakest shorts. That's what we're doing. This is, actually, let me show you how we set this up. Okay. Okay. So to set this up, this works through an API connection to your exchange. Now, an API key does not give you permission does not give anyone in our company permission to withdraw funds. So there's no way that anyone can steal your money. You're not handing over your money to us and trusting us to give it back to you. In fact, you don't need to ask us permission for anything. So you log on with Binance, BitGet, Bybit, DYDX, or KuCoin, and you just deposit money into your account. You don't have to let us know. We don't have to turn it on. There's no button to press. You don't have to leave your computer running. What happens is the next day, the system realizes, okay, he's got $100,000 in his account. It will develop the mathematically perfect portfolio for that sized account. If you want to pull some money out, if you want to buy a car or a house or go on holidays, you just pull that money out. You don't have to email support and get permission. You don't have to wait for us to process your withdrawal. That's all bullshit. The money stays in your account. It's all yours. If you have $100,000 in your account, you pull $10,000 out to go on holidays. The next day, the system just says, okay, we've got $90,000. Let's build the perfect $90,000 portfolio. And that's basically how it works. It's very, very simple. You need to run Google Authenticator on it. You can't be sharing accounts or share your passwords with people. That we don't allow that. That doesn't work. It's a very, very high security operation. What this is about is creating generational wealth for crypto. So our system earns about 100% a year. If you start off with $10,000, it sounds weird, but by year 5, you've gone nuts. You're at $320,000, and you're within sight of a really magnificent 8-figure fortune. Compound interest is where it's at. Everyone in crypto is talking about getting rich quick. I want you to get rich slow. Ideally, I'd rather see you earn a couple of $100,000 from slinging shit coins in 100x coin club this cycle, and then turn that into $10 million, rather than earn $1 million, give 80% of it back, and give up on crypto in frustration. I'd like you to get rich slowly. So our strategy has done on average 107% a year. And you can see that when you're talking about compounding, it all happens in the backstretch. What you really want to do with any trading system is just relax and enjoy the ride. Don't get too stressed about it. Markets go up, markets go down. It's very, very, despite all the bullshit that I go on with, it's very difficult to predict the future if it's possible at all. But you just got to know that if you can manage to keep your hands off the steering wheel, it's going to make you rich in 5 or 10 years, no matter how small a grub stake you're starting with. If you can just not mess with it, if you can not worry about day-to-day fluctuations, then you can be highly confident that at the end of the year, you're going to show a profit. Now, there is a difference between bull markets and bear markets. Why? Because markets take the stairs up and the elevator down. In bear markets, we have much longer sideways periods. But when we get a market crash, we make a lot of money. And we don't get this kind of explosive growth in bull markets. In bull markets, we get a steady climb up and then a sideways period. These average sideways periods in bull markets are 19 to 31 days. And in bear markets are 60 to 148 days. Now, my goal for you is the ability to do whatever you want, wherever you want, with whoever you want, for as long as you want. Now, money is just a tool to buy time and freedom. Compounding does the real work. So who's impressed so far? I owe you a big thank you for putting up with all my bullshit, for reading my emails, for taking the punt on crypto when it's an admittedly very stressful thing to do. For those of you who know me, words alone aren't enough to thank you for supporting me in my quest to be the best in the world. And it is the absolute honor of my life to grind like an animal every day for this community. And I'm leading us to generational wealth. It's happening. For those of you meeting me for the first time, the only way I can really earn your trust is to put money in your pocket right away. So for giving me your time and attention, I'm going to give you the light version, which is, it's not automated. It's a signal service version of the system you've just seen. It's far simpler. It's easy enough for even a beginner to use. It's not quite as good. It's about only around 70% of the performance of the automated system, 75% in a bull market, but it stops you getting wrecked in a bear market. Now, let me show you how to use it. It's the exact same website, login, security, finrev.trade. You have a simplified dashboard. It just tells you what you should do today. Open a long or close a position, tells you what positions you should have open, and then it shows you what positions you've closed recently. It's very, very simple. It gives you, you're going to get trades probably 3 times a week on average. Now, I got one more thing to show you, and I've saved the best for last. So what if you could earn twice as much as the system I've just shown you? What would that do for your life? How much faster would that get you to your freedom number? So blue is 100% a year. Red is 200% a year. At the end of year 1, there's a pretty significant difference. But by year 2, that difference is starting to blow out, 40,000 compared to 90,000. And by year 3, it's like ludicrous. And after that, you wouldn't even believe me if I showed you the numbers. So compounding rate is absolutely everything. And let me show you how the really big state-of-the-art algo trading firms, the Rentex, the Jane Streets, the Susquehannas, state-of-the-art algo trading in 2024 is to blend multiple systems together. What we see is in exactly the same way that holding a portfolio of coins is better than holding any single coin, blending multiple systems together is better than holding any single system. Now, carry is one of the strongest edges in finance. There's far more institutional money using it than trend. It's not quite as good as trend. You can see it's not quite as good. It's a 53% sharp 1.17. It's not nearly as good, but the return profile is very different. It makes money most of the time and then shits the bed. It makes money most of the time and then shits the bed. It makes money most of the time and then shits the bed. It makes money most of the time. This is a very, very appealing strategy to add to our existing strategy. So look at the magic that happens when we combine, and we're going to combine it in a 35-65 completely unscientifically chosen mix. We're going to combine carry, which is 53% a year at sharp 1.17, with trend, which is 100% a year sharp 1.71. And we go from 100% to 243% per year. Now, admittedly, this is run at a volatility. Volatility is how much your account wiggles, and we generate everyone a custom system. This is a little bit wilder than I would recommend trading. I would like to see you, the max drawdown on this is going to be about 35%. I think that's probably, a lot of people would say they can handle a 35% drawdown, but then when the 35% drawdown actually happens, they wouldn't be able to handle it. So I would prefer to see this for most of you dialed back to around 180 to 200%. But it's still a risk-adjusted return of sharp 2.15, which is holy grail stuff. It's like really, really objectively incredible. Like I said, I think around 200% per year is the sweet spot target for this advanced version. Now, this is the difference between retiring at 40 and retiring at 50. It's the difference between retiring while you're still young enough and to get out and enjoy the world. So here's the deal. We got three tiers of FinRev available for you today. FinRev Silver, everyone here right now gets it for free. FinRev Gold is $6,500 for 3 years of fully automated trend following trading. That's with a single account, single exchange. So you can pick Binance, Bybit, KuCoin, DYDX, BitGet. FinRev Platinum is $9,500 for 3 years of fully automated trading with all of our systems, including future upgrades, and it has 2 particularly interesting features. One is you can spread your risk between exchanges. So if you're worried that Binance might go broke, you can split between Binance and Bybit. The other thing you can do is you can have multiple accounts and run one at a high degenerate leverage and another at small leverage. And let me just quickly show you how that might work. Okay, so let me show you what this would look like if you're an idiot and you dialed the risk up to 11. You dialed the risk volume up to 11. So this guy, he works for us. He started off with $247. He'd done absolutely nothing until the bull market kicked off. And then he was trading at 100% vol target compared to all the other simulation, all the other results I've showed you have been at 45%. So he's trading at twice the risk. He went in a very short period of time from $200 to 2,000 to 4,000 to 5,000 to 6,000. And then we got our first pullback. He got to 9,600. He turned $200 into 9,600. Wild ride back to 8,000, all the way up to 18,000, lost 30% in a single day, down to 12,000. You can see this is a very uncomfortable ride, right? Then he's back up 3 days later, he's back up to 18,000. Then he's at 21,000. And since then, he's back to 13,000. So he's got from 21 down to 13%, down to 13. That's about a 45% drawdown, 42% drawdown. This is much more than most people could handle unless they were just starting with $225. So this is more than you guys can handle. The only reason he can handle it is because he just started with $200 and threw it in. Now, the advantage of FINREV Platinum is that you can do that. You can throw a couple of grand in at high vol, and don't worry about it. If it comes off, it comes off. If it doesn't, it doesn't. So FINREV Gold is just trend following, which is the best system. You get 3 years of automated algorithmic trading. It's only like $130, $140 a month. Why do we charge for 3 years? Because this is not something that you want to be in and out every month. In fact, if you try and time this, I absolutely guarantee you're going to fuck it up. Everyone I've ever seen who tries to pick and choose their moments here fucks it up, myself included. You get 3 years of automated algorithmic trading. You get VIP onboarding with one of our expert crypto trader coaches, not a customer support person from the Philippines, like a guy like Ian or Maurizio or Paul, guys who are full-time crypto traders who live and breathe this stuff and who have their own money in FINREV themselves. You get all the statistics and monitoring that I've showed you today. You can delay starting or pause at any time. So let's say, for example, you've got this meme coin that you're red hot on. You want to stop your FINREV. You're going to dump it into your meme coin. It's going to 10x, and then you're going to pull it back. Go hard. You can absolutely do that. We've got our double your money guarantee. So the guarantee is if you aren't in profit after your first 12 months, the 3 years doesn't start until you've doubled your money. And no one's ever had to claim on that guarantee, by the way. No one ever. Now, FINREV Platinum, 9,500 for 3 years, is 3 years of automated algorithmic trading, exactly the same, except you get multiple exchanges and multiple vol targets. Get a VIP onboarding with one of our expert crypto trader coaches, the same stats, the same completely custom system designed to help you achieve your financial goals. So it's not a one-size-fits-all system. We sit down and we work out what's the best for you. You're grandfathered into new systems. We have 6 more on the drawing board. Our head of research, James Hodges, the Robot James on Twitter, robotjames.com. I'd encourage you all to check out his website. He's our head quant, and he is amazing. You can delay starting or pausing at any time. It's got both trend following and cross-sectional carry. And what this does is combines them to smooth out things. Same double your money guarantee. So how do you get access? finrev.trade/call. Now, one thing I want to point out is that the best time to put money into these systems is not when they're at highs. The best time is while they're in pullback. This is absolutely the ideal time to put money in. And I just dumped another 80 grand into mine a week ago. So you shouldn't really listen to what I say as much as watch what I do. And I'm adding more to FINREV right now, but at a high volatility target. I added 80 grand at 90% vol target. So if you need a payment plan, if you want a longer commitment, if you want a shorter commitment, if you want to try it for a year to see how it goes, whatever you want, we've got options. We'll take care of you. Everything's very flexible. If you've got money coming in, if you want to wait until some coin plays out, just talk to the enrollment staff. They're super flexible. If you're an existing customer and you want to upgrade, you can just pay the current 3K difference. finrev.trade/call, and I'm going to pass it back to Ian now.
Hey, Scott, that was a really great session. So I'm just flicking back through the comments from there. Somebody was interested.
Good question from Tuck. Does the system take profits out before it goes down? No, it doesn't take profits out before it goes down because there's no telling how high it could go. So if you, it takes profits out when it starts going down. So let's have a look. So this is Solana. Pick a coin, anyone in the chat. Let's look at it on. Pick a coin, Ian.
Algo.
There we go. All right. So Algo was at its peak here. As it started to go down, we took position off. Then it started to go back up. We added it. As it starts to go back down, we aggressively took position off and got completely out and then got short here. That's the way it works.
Nice.
Rahul, is there any minimum investment amount? Technically, no, but it's suboptimal with less than about probably $2,000, and you got to pay us for it. So I wouldn't recommend using it for anyone less than $5,000. Like that would. And yes, you can use it in the USA, and we use it through distributed exchanges, perp dexes like DYDX.
Nice. So Raoul, about
alternative. Sorry, you first. My bad.
Okay, I was just going to say, Raoul's just asking for a little bit of clarification around the compounding. He's saying, will compounding be within the product?
Yes, absolutely. That's the key to baking the whole cake, is that compounding happens automatically. You shouldn't have to think about that. Your money grows, and then so technically, let me show you the way that it works. So you've got a portfolio that's perfect for the 2nd of December for a $5,000 account. The next day, well, a week later, well, let's go one day at a time. So you've got on the 26th of February, you've got $11,000. On the 27th of February, you've got $11,832. So what it does every single day is recomputes the perfect portfolio for an account that size. It grows again, recomputes the portfolio, recomputes the portfolio, recomputes the portfolio. So because of that, the compounding is built into the system. So you don't have to there's nothing you have to do. Does that make sense?
Nice.
CCRN Campbell, it definitely works for US customers. We've got currently, I think like $7 or $8 million US worth of US customers.
Yeah, we have, I'd say, probably half of our client base is customers. Plenty of Aussies, Kiwis, Canadians.
Bill, I've never heard of Velo. Sure, Brandon, let's dig into some of these momentum indicators. Actually, let's do. So let's start with the easiest signal to understand. This is the distance to a 10-day breakout, a 20-day breakout, a 40-day breakout, an 80-day breakout, a 160-day breakout, or a 320-day breakout. Now, you can see that this is the Sharpe ratio performance of those signals. You can see that the breakout 20 isn't doing very well. Breakout 80 isn't doing very well. The best is breakout 40. So we average these, applying more capital to the ones that are performing best. Convert that into one number, and then we're going to apply it between our different signals. So our signals are moving average crossovers, MACD, which you're probably familiar with from technical analysis, distance to a 2 standard deviation Bollinger Band, a thing called floor ceiling, which is from our great friend Laurent Bernou's short book of his long short Fidelity hedge fund. Normalized momentum, which is smoothing the prices and then applying the same moving average crossovers and breakouts. And you can see that we apply different composite weights according to how well they're performing. So for example, moving average crossovers for Bitcoin are getting 23% of the capital, breakouts are getting 17, and the others way less. And you can see the Sharpe ratio of those individual signals changing over time. They get allocated more or less capital. Rahul, do not take tax advice off that guys off the internet. Like, just don't. Like, I'm not qualified to give tax advice. I wouldn't listen to tax advice from anyone who looks like me. You know, I look like Professor Scott, but now I'm Thug Scott. Now I'm back to, you just don't want to take tax advice off people like me. What do I think of crow with hat memes? I don't know, I never heard of it. It looks like, it probably sounds, probably crow with knife. Memes are a lottery ticket, man. So meme coins work because they have the chance to make you rich. They're essentially priced like lottery tickets. There's no difference between short-term or long-term withdrawal, Rahul. If you withdraw your money, you're paying capital gains tax on it. That's okay. Anything else you think of?
Yeah. Maybe you could just touch on Kaman, I can't say that name. Maybe you could just touch on why FinRev generally only invests plus or minus 20% of the funds.
Yeah, that's a really good question. So what we're trying to do with the trading system is to say, how much do we want your account to wiggle? Do you want it to wiggle a lot, or do you want it to wiggle a little bit? The individual coins that we're investing in are mostly altcoins, which wiggle a lot by their very nature. Like, most altcoins are up or down 60% the last couple of weeks, right? If you're 100% invested in altcoins right now, you're wiggling up or down 60% or more. And most people don't want that level of account wiggle. So for most people are comfortable with drawdowns of around 20%. And what I recommend is to try and keep it to around 20% drawdowns. 20% drawdowns is what I think personally that most people can live with without freaking out. You know, most people say, oh, I can deal with 30% drawdowns, but then when it happens, they're calling me saying, Scott, I hate you, this doesn't work, it didn't work for me. And then they're pulling their money out, and then it goes back up, and then they're like, it didn't work for me, Scott. I pulled my money out when it went down, and then it went back up.
Brandon's got a question, which just got to figure out which one it is. Let's have a look.
Hey, Brandon,
I have heard those accept breakouts? Is there somewhere I could go to learn more about that?
Yeah.
There we go. What is a breakout though, as in the base indicator without the period parameter?
Sure.
Is there a bit more?
All right. Let's look at it. Let's do a 20 period breakout. Sorry. Okay. So we are measuring the distance from the center. We are measuring the distance from price from the center to here. And then we're measuring this distance to here. This distance to here. And that is the strength of the breakout signal on the long side. When that signal is very strong here, and here it's somewhat weaker. Here, that signal turns negative, just a little bit negative. And here it turns a little bit positive. So these are very small signals. And now, so my drawing skills are not particularly good. There we go. Let's do a vertical. So it works like that. That's the way that the breakouts work. Let me show you how some of the other ones work. Let's do trend following 57. There we go. So another way would be measuring the distance between two moving averages. So this is a very long-term trend following signal, and the signal is really quite big here. This is a trade that I'm in, which I just got completely fucked on in Coco. So you can see the signal gets bigger and bigger and bigger and bigger. That's, well, not basically, that is how it works. Does that answer your question?
Nice. That's really awesome, man. So that's over an hour of people's time that we've taken so far.
Yeah, there's one more question that I really want to answer. The security protocols to protect against hacks are extremely serious. We have a full-time DevOps guy. We don't hold any of your private keys at all. We have a hardware authentication module that's hosted in our Google Cloud instance. The one that we use is in Tokyo. There's a physical hardware module that someone would need to get access to within the data center to get access to it. And we absolutely enforce you cannot even log into the system without two-factor authentication. You can't share your accounts. It doesn't. There's no single man failure. We have a team of 7 developers, and we have a succession plan in place, and we have a disaster recovery plan in case a tsunami hits Tokyo, which is actually something that we have to plan for. Like it's a serious operation. It's not like some bot that we paid some guys in India to build. It's a serious operation with a team full of programmers and serious disaster planning.
Nice. So just confirm for Wolf Seeker, yeah, if you're in the 100x club, then you get trade alert signals and you go and manually get the trade done. If you get the free version of FinRev Lite, that's also a manual trading system. You can watch the replay of this where Scott ran through it. We also send you a trading guide as well. And it is very, very simple. Open up the FinRev, just do what the machine tells you. You know, today's positions, close, sell. But yeah, again, you would be doing those manually. So it is the FinRev Gold or Platinum that then becomes the automated system. So think of them as three separate things, but they all exist in the same
100x Coin Club
world.
is punting shit coins based on vibes. It's statistically valid vibes, but still vibes. It's really just gambling on shit coins. It's high risk. I mostly do long only, although I have done short side stuff in the past. It's very volatile. Big wins, big thrills, big spills. FinRev is steady, stable, smooth, and consistent. Yes, of course. All right, guys. I've taken up enough of your time. So, yeah, thanks. Wait, honestly, guys, this FinRev is a beautiful, beautiful system. It's what I always wanted. I'm very happy to have what I've always wanted. Built it for myself.
Nice. Let's all slowly get rich.
All
A
right.
lovely note to end it on. Ta-da!